For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Bursa Malaysia has been part of the Malaysian economic growth for over 4 decades. We have been working relentlessly to create a transparent, efficient, and vibrant stock exchange.
While we've been working at building a vibrant marketplace, inclusivity and contributing towards economic growth, we have also channeled efforts and resources towards supporting the community at large. Shares to Share is one such effort, which has been developed to create positive impact towards society and the environment. To put it simply, Shares to Share is a transparent and easily accessible facility that enables investors to donate their listed securities or proceeds from the sale of their listed securities towards charity through Yayasan Bursa Malaysia. You can donate odd lots or even board lots. The funds from the sale of these shares will be channeled to approved charitable organisations and their respective initiatives or projects.
Bursa Malaysia has waived its portion of the transfer fee, clearing and trading fees for all transactions that are conducted under Shares to Share. The participating brokers of Shares to Share have also agreed to waive their portion of the transfer fee and brokerage. The charitable organizations that have been selected have undergone the necessary due diligence process and have been duly approved by an independent selection committee.
At least 500,000 populations live with some kind of disability. They are most of the time being left behind. We need to empower them, otherwise they will continue to be the liability. A lot of human resources wasted from this group of people.
We provide a lot of support for persons with disability who are young adults and adults. We have a social enterprise called Project I'm Possible, where we managed to hire all persons with learning disability to work here. We have a cafe, bakery, weaving, and we have an art gallery.
Purity of thought, word, and deed, that is action, is very important to be really successful. We must know some skills to be able to help us then paperwork. The grant from Shares to Share will be used for, one is sewing, handicraft, classical dance, and so on.
Our patients have to be fed, they have to be looked after. We look out for any sort of disease they might develop, and also those unforeseen circumstances. Thanks to Bursa's initiative, we can be a little bit easy on our patients if they are family members.
Donations will all be channeled to organizations that are involved in the sustainable development of Malaysia. Shares to Share scheme offers you the chance to do so in a simple and effective way.
Bursa's Shares to Share allows us to do good by donating our shares to charities. Join us in making a difference to the society by donating your listed shares.
Shares to Share is open to all donors, individual as well as corporates or other types of entities. You can transfer your listed securities via Bursa Anywhere app at a click. For more information, please visit our Bursa Malaysia website.
Hello, everybody. Welcome to today's webinar brought to you by Bursa Malaysia, that managed by our company LifeChamp. Today, our webinar title is How to Avoid Emotion-Based Investing. So, very good morning to everyone. My name is Shane Chu. I'm the moderator for this session. But before we talk about this topic, how do you avoid emotion-based investing? We have a special segment by Cedric that's going to share with you how Cedric can help you to dissolve your dispute with any of the Cedric members. So this session is going to be a very short 10-minute session. So without further ado, let's invite the case manager of Cedric, who is Ms. Lau Kayin, to tell us a little bit more about Cedric and how it can help you as an investor. Good morning, Kayin.
Good morning, everybody. Thank you, Shane.
Yep. So I will stop sharing my screen and hand over the control to you.
All right, let me just pull up my presentation. Give me a minute. All right. Okay, so a little bit introduction. My name is Karin. I'm a case manager with Seadrac. I've been working here for almost 2 years, right? And I'll thank you all today so that you listen to me on for me to share about our company, how we can help you as investor while you are navigating in a capital market. Now, so a bit of disclaimer at first. Seadrac is set up to help the investor. Now we hold all the rights for this in this presentation, and all the information shared is the view of me. You also have, like, if you want to rely on the information, we will have to verify information first. Now, first of all, who is Seadrac? Why Seadrac is here today to give you a little bit of presentation, right? So as a lot of investing in a capital market, like shares, trading shares, or buying unit trusts, all that, often when you have complaints, sometimes you might think that you are helpless because you can't bring it to court because amount is too small, right? Seadrac is formed to provide investor protection in the capital market. Right, we are formed to give the investor protection and confidence to trade in the capital market. Now, many investors would think that the only solution when you face an issue is to bring it to court, but it's not true, because you can bring it to Seadrac, which offers like a different method of resolving your complaint aside from going to court. Right, this is what we call alternative dispute resolution. So now you might be thinking, it sounds like very Changi and all that you know, our claim. Our company is not for those like multi-million complaint, you know. It's formed for these small claim, like if your claim is below 250,000, then our services are free of charge. If your claim is more than 250,000, there's a small fee that we will charge you. But generally, if your claim amount is more than 250,000, then our services are free. And our process is a bit more flexible. It's not like it's not court process. It's outside of court, right? Now, we are here to help you because we are formed by the Security Commissions as an independent and impartial body, meaning we are not funded by the members like the brokers or fund management company. They don't fund our operation, so that we can remain impartial, independent while we are helping you to resolve the dispute. Right now, so how can we benefit you, right? Now, first thing is a one-stop center. Like, you just have to file a complaint with us and we will resolve it through mediation and education. Second thing is also this help to enhance investor protection, because in any event you have any issue with the broker or like the capital market intermediaries, you have a place to lodge a complaint. And we also, during the process, we also explain our process and also a bit of the capital market knowledge to the investor to help enhance the investor understanding of the market. And lastly, all our panel members has been very experienced, and our case manager also well trained in handling capital market related disputes. Right now, okay. Now, who can file a complaint? First thing is individual investor or sole proprietor. Individual investor, meaning people like you and me, right? We invest in individual capacity. Second thing is against a Seadrac member. So you can go on to our website to check who are the Seadrac members, right? Mostly are the stockbrokers, fund management company, or capital market intermediaries, right? Or PS related. Now, it also involves capital market product and services, which we'll explain in the next slide. Now, your claim must also involve a monetary loss, right? Because we only deal with monetary complaint. And lastly, you must, before you come to Seadrac, you must have first go to the member to lodge a complaint. This is so that they have been given the time to investigate internally first, whether there's any wrongdoing or misconduct internally, right? Now, What are the capital markets product or services that fall under our purview? First thing is security, which includes like shares and warrant, derivative like futures, PRS, fund management, and unit trust. Right. How do you lodge a complaint? You just have to download a claim form from our website. And then you will take a copy of your IC and the supporting documents, and then you can just email to us and our case manager will contact you for further information. Now, this is our dispute resolution process. It's not, it's quite simple. Firstly, like I said, you just have to file a complaint with the member to give them 90 days to resolve a complaint, right? And the member final replies must inform that they will tell you that, oh, we can't compensate you. You have to come to CIDRAC, right? Within once it's issued the final reply, you have to come to us within 180 days from the receipt of the final reply, right? And after you give us the complaint claim form, we will assess the case, look at the merits and whether it's eligible for us to handle it. After that, we will get information from the claimant, from the member as well. Then we will arrange something called mediation, which we will appoint an independent mediator to help both parties to talk to each other, to understand each other, and hopefully both parties can voluntarily come up to a settlement agreement. All right. Now, unfortunately, if the parties can't reach a settlement in mediation, we will go to adjudication, where an adjudicator will give a decision, right, to the parties. And this is like imagine how you watch a legal drama, why not like court giving a decision, but this is not in court, it's still in CIDRAC setting, what we call the adjudication. This is our process. Now, this is my presentation is very short. Now, this is our contact method. You can email us, you can call us, you can also follow our social media, right? Any information you need, you can email us, or let's say you have a complaint that you're unsure whether you can handle it, you can also email to info@cidrac.com.my, right? And that's all my presentation. Thank you. Also, thank you, Bursa, for giving me an opportunity to share about our company to you today. Thank you.
Thanks, Kayin, for sharing with us briefly about how CIDRAC can help investors to resolve dispute with any of the CIDRAC members. So if any questions for Kayin, we may take 1 minute for you to write a question in the Q&A. If there are no questions, then we'll move on to our main topic today. Let's see if there's any question. In the meantime, let me share my screen. Okay, looks like there are no more questions. So thank you so much, Kayin, for speaking with us about CIDRAC. All right, so our topic today is how to avoid emotion-based investing. Now, as an investor, I'm sure you have experienced that you have a whirlwind of emotions whenever it comes to investing. Sometimes you have fear, sometimes you have regret, sometimes you feel egoistic, sometimes you feel overconfident, sometimes you feel greedy. So these emotions will get in the way and disrupt our investing or trading plan. So our topic today will look into how do we avoid this kind of emotion-based investing. Before we begin, as usual, disclaimer, whatever we share in this session is only for educational purpose. In no way that I give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you're 100% responsible for all investment risk. So allow me to introduce our speaker today. She's a licensed financial planner certified by the Malaysian Securities Commission Financial Planner Representative License and Bank Negara Financial Advisor Representative License. She's a course trainer and public speaker at Financial Planning Association Malaysia and Symphony and Bursa Malaysia. She has over 25 years experience in education, accumulated over 50,000 students and conducted over 200 large-scale corporate courses. She's also a best-selling author who has published 6 books on investment and financial planning, and her articles have appeared in financial magazines such as The Personal Money Compass, and many more. So she's none other than Miss Pauline Yong. So good morning, Pauline. How are you today?
Hi, good morning, Shane. I'm good today. How are you?
Yeah, I'm fine. Thanks for asking. All right, so we can't wait to learn from you. So let me stop sharing my screen and hand over to you.
Okay, sure. Okay, thank you, Kayin, just now also for sharing. And so now it's my turn to share my screen. So here I am sharing with you about emotion, how to avoid emotion-based investing. Now, before I continue, right, maybe I want to get to know from you guys, how many of you have actually you have tried cut loss before? So meaning that you see a position whereby you are not making money, you have losses, and then you decided to cut loss. Okay, so how many of you have cut loss before? Okay, so I have to be honest. I want to see how many of you have done cut loss. So you can put in the chat. Okay, I see PK, Vision, Sing Hok, and Lily, and Emily, Rudy, Ruby. Wow, okay, so many of you, huh? Okay, the reason why I want to ask this question is because I want to see how ready you are, okay, to accept the fact that if in a situation whereby it doesn't work the way you want, you just have to cut loss. Okay, so that is how you deal with your own emotion. Okay, and because most of us, we are not willing to cut loss. So that is most of us, because we are afraid of losing. So we need to deal with our emotion, especially if you see that the investment has lost its fundamentals. Okay, if let's say you are looking for long-term investment and that particular investment, it has lost its shine. Okay, meaning that their market share is contracting. Usually when you want to invest, you want to see that the market share, the company has a strong market share and the market share is growing. So that is some positive. If let's say the market share is shrinking, you may want to consider you want to sell. Okay, and for trading, same thing. So if for trading, if let's say your original intention is that you need to reach certain level, but after you got into that position, it didn't go that direction, and then it's going the other direction, the opposite direction, then up to a point, you must have set a cut loss point. And if it reached the cut loss point, you have to cut loss. Okay, so these are how you deal with your emotion. And today, my session here is to talk about what are the common emotional behavior in investment, and how do we avoid all this emotional investing. So I have to say in advance, we cannot 100% correct our emotion, okay? Because emotion is something that is within ourselves. So we are not like robot, okay? We are human. So we just have to be aware, and then we have to use some tools, okay? Some of the tools to help us to manage our emotions. So that's the best way we can do, okay? Using some tools to help us. Okay. So here, the first thing is, how many of you have read this book called Daniel Kahneman? This is the author, Daniel Kahneman, Professor Daniel Kahneman. His book is Fast and Slow Thinking. He has a book published before, and then he talked about the way our brain operates is that we have a fast thinking, and then we have a slow thinking brain. Okay, so anybody have read Daniel Kahneman's book here? If you have read, you just raise your hand. Anybody? Okay, so his book is actually heard before. Yeah, that's great. Okay, this was actually a few years ago, I think about 8 years ago or something. And at that time, the behavior finance was a popular topic that a lot of people are talking about. This professor, he came out with this, he identified that human has two systems of thinking. System one is this fast thinking. It's automatic, it's quick, and it's intuitive, and then you don't have to think so much. It's just automatic. Another way, system 2 thinking is a slower decision. So if you want to make a decision, then you have to think thoroughly. And then we have to weigh the pros and the cons and then think for quite some time before you make that decision. Now, can you give me an example of a fast thinking decision? Okay, can anybody give me one example of a fast thinking decision? So meaning that you do things without thinking and then you just do automatically. Anybody? Something that you always do. Breathing, very good. Okay. Ting, yes. And impromptu buying. Okay. Edmund, impromptu buying. Okay, maybe, yeah. You didn't think and then you just buy, right? Okay. Anything that you didn't involve much thinking and then you just do, okay. And apply brake when dangerous driving. Yeah, that's great, Lily. Yes. Driving is something that we have been so familiar, especially if those things are the things that you have been doing on a daily basis, like brushing your teeth, and then you walk, you eat. The movement of your walking, you didn't think so hard. But however, if let's say somebody who had met an accident and then they have under physiotherapy and they have to get back up to walking, and you find them very difficult to walk. Every move is so conscious. But for us, we have been walking for every day, so we are so automatic. So things become automatic. When you see a light in front of you, and then it's either you flight or light. Okay, so something like flash something in front of you, and then you just want to avoid it. It could be a ball that throw to you, and then automatically you just put it like that. Some flies coming in your way, you just do like that, okay, without you have to think so much. So these are all automatic. And deciding to, yeah, so then what about system 2? System 2 is something that we have to think thoroughly. So what do you think about investment? Okay, so how many of you will treat investment as an automatic, and how many of you will treat investment as a slow thinking investment? Value investing, long-term investing, yes. Slow thinking, okay, have to be slow because you need to weigh the pros and the cons and then think thoroughly whether this industry is doing well. And for example, now the most hottest theme now is the AI theme. So everybody is looking at how far the AI theme can go on, okay? So we won't know until we do some research. Cautious decision, yes. Okay, so later we'll come back to that AI and then start, and then you see how far it will go. Okay, later we'll come back to that. Yes, Shing Hawk says that cautious decision. So for example, you need to do some property investment. You need to decide on even what to eat, because sometimes some people, they are very conscious about eating the food. So they have to decide, oh, what do I have for dinner? What do I have for lunch? So then this, you have to make some decision, okay? However, if let's say you are like Warren Buffett, he made the eating become automatic. So every day, lunchtime, he will go to the same place, order the same dish, and then repeat every single day. So then you make that decision become automatic. So you can choose, okay, the decision. You want to make it every day you spend a lot of time thinking what to wear, or you want to make it automatic. Is like you have a uniform every day, you just wear your uniform, you don't have to think so much. So in investment or in trading, okay, especially trading, can we do that? Trading, can we do that? Can we do automatic for trading? Is it possible? Anybody? Anybody? Can we do automatic trading? A tough question, right? You wanted to say yes, but then can we? And you know, all kinds of questioning. Yes, with the AI, maybe with the AI, possible with the AI. But do we have AI now? Okay, I'm actually trying to research on this trading bot. The best way I can do is predictive AI. It's not a generative AI. We haven't reached to the state yet where we have the generative AI for trading bot. The possible is predictive AI. That means you are given the set of formula and then the AI to perform the trades for you, just to perform the trade, and then that's it. Okay, it didn't make extra decision for you. They just perform the trade based on the formula. Ahmad say yes, it need practice. Yes, okay, yes, you are right, need practice. And Zakaria say if platform algorithm applicable, auto target price, auto cut loss on the set. Yep, you have to set those instructions, right? So they just follow the instructions for you. And Lauren says that Jim Simons uses quantitative trading strategy. Okay, quantitative is very common now. Okay, it's very, very common. And what is not common is the AI now. Okay, because AI is just a new thing. So if you can use the AI chip to develop some generative AI tools, I think that is fantastic. Renaissance Technologies. Okay, so then you are looking at all these with the help of a machine. So all these that you are giving me the answers there, actually you are telling me yes, we can do it with the help of a machine. Correct? If let's say for human, that's why I must say that practice. You need to practice until you act as a robot. Just like you turn your lunch decision into an automatic decision by having the set of orders or instructions given to the restaurant. Okay, every day I just come here, you give me the same food every day. Then you make it like an automatic. So then if you are human and then you want to apply into the trading platform, you can do that. Okay, but provided you have to really switch your mind into automatic, whereby you identify your criteria precisely. Okay, for example, you look at a 15-minute chart, let's say. Okay, let's say you look at a 15-minute chart, just for example, education purpose, not for recommendation or anything. So, this is one horizontal. Okay, doesn't have much possible. It's all here. At least you have some possibility there. Okay, so if you are in the uptrend where your price is above the 20-day moving average, significantly above it, and then it's like it doesn't really cross this. This is like you are seeing your price crossing the 20-day moving average. So the minute you see your prices are crossing the 20-day moving average line, it's a horizontal. Okay, so if it's not crossing, it's a clear direction. So this is a clear direction, it's a down direction, and this is a clear direction, it's an up direction. And how about this one? This one you can still see some crosses here. Okay, so there is some direction, but it's not so clear, not as clear as this one. The momentum for this is better than the momentum for that. Okay, so first you identify the trend, and then you say, okay, I want to trade when the price is crossing the 20-day moving average line. Okay, so then you have to put instruction. Okay, if it's a 15-minute chart, you can also do as a 5-minute chart, and then you just observe. So if it crossed above the 20-day moving average line, you long. Okay, you long on the second candlestick, let's say. And then you sell when it fall out of the 20-day moving average line. So if it cut below, must be one candlestick completely out. See, you go in at the second candlestick, and then you don't come out until the whole of that candlestick drop out of that 20-day moving average line. So here you haven't dropped out completely. what I mean drop out means that you must see that it's a totally outside. Okay, so this is still hanging there. Then this one is outside already. Okay, so this is outside, totally outside. So the minute you see that it is detached from that 20-day moving average line, you just sell. Okay, sell. So it could be your cut loss point. Okay, if it go down and then it go below that 20-day moving average line, then you just sell. Okay, it could be your cut loss point. So for example, here you go in here and then you sell here, cut loss. So this one you make a loss, and that is because it's a horizontal trend. Okay, here you make money is because it is an upward trend. Okay, so here cut loss, you sell, make a profit here. And if let's say you want to initiate a short position, yes, you can. After you sell, you can initiate a short position and then you wait for to go back up again. So in this case, this go back up, you close your position. So in this case, you are breaking even or just a small gain. Okay, so because this whole thing is a horizontal. So if you are using a moving average line on a horizontal trend, what is the effect? The effect is most likely you are breaking even. You won't have a big loss, but you're just breaking even or maybe a small loss. Okay, you won't have a big 15-minute chart. I'm looking at a 15-minute chart here. Okay, 15-minute chart. You can try the 5-minute chart. Okay, I'm looking at being as a day trader. Okay, you can try being as a day trader. You can go for a paper trade first, and then you see how does that work for you. Okay, just a simple moving average. You have a simple moving average as your criteria, and then you just follow that criteria like a robot. So meaning that if you do it on a daily basis on a piece of paper, on a paper trade, okay, you do it on a daily basis, and then sitting in front of the computer, and then just to use one criteria, and then you just see, okay, see whether it works for you. Okay, it's on the paper first, and then you just try. Okay, the important is that you must be able to identify if it's a horizontal trend or a momentum trend. Okay, so that is the first criteria. Then only you can use this moving average. So that is one simple. So that means that if in order to have that automatic mindset, you must make the instruction very, very clear. That means your rules are very, very clear. You must have this, you must have that, then you follow it. And then the cut loss point is your exit strategy is very, very clear. Then only you can carry out as like a robot. Okay, then you can condition your mind to act as a robot. And if let's say you have that in place already, okay, but however, when it comes to cut loss, you are procrastinating. You say, oh, maybe I should wait for a while. Oh, maybe I'll do this. Oh, maybe I'll do that. So you're giving yourself a lot of excuses. So the minute you find that you are giving yourself a lot of excuses, that is emotional. You are being emotional. Because if you are not emotional, you won't give yourself excuses. You will just straight away carry out the transaction. I mean the execution. Okay, so the minute is you find yourself procrastinating, giving excuses, and then that is emotional. Okay, so you have to realize your own emotion, so that when it comes to trading, especially for trading, because for investment, emotion does play a part, but it's not as important or serious as the trading, because the trading emotion is the most important part. You can have the best strategy. A lot of time people focus on the strategy. Oh, I have this strategy, I can make a lot of money. Oh, I have this strategy, I can consistently make 20% per month. They focus on the strategy. No, it's not the strategy. The strategy, you can have any kinds of strategy, but if you didn't apply your emotion well, you won't be able to be successful. So in the end, what is the determining factor that separate from the 10%? Because people say 10% of the market traders are successful, 90% are not making money. So what differentiates that 10% is they are able to handle well their emotion. Okay, so that is why we want to talk about that. Okay, so let's take a look at the different types of emotion. So because of the emotion, we will have all these stock market crashes. You see, when we have up to the top and then we crash like this. So this was in the 1929. So I don't think that this will ever happen again, unless we have a World War III. When you have a World War III, you are thinking that nobody can survive, and then you just have to get out of, take whatever money you can sell all. Okay, so that is that kind of a situation. But here, this is 2008, 2009. Okay, so also we had a sharp fall. Okay, and however, recent years, we do see that we do have like a flash. This is what I call like a flash kind of sometimes you have a flash plunge. That means the plunge is a fast one. Okay, you have a quick plunge and then followed by a quick rebound. Okay, and sometimes you will see that the decline is a slow and continuous. So for example, last year, 2022, what we saw, the stock market was a slow but continuous kind of a downtrend. So for the US market, that was the first time, if you were to compare to the last maybe 10, the last one was 2008. Okay, 2008, that was the last time where you saw you have almost like a year of a decline. So in fact, last year, 2022, the US market, we do have almost 1 year of a decline. But however, the decline is not very sharp. It was like a flat kind of a decline, slowly, gradually declining. Okay, it's not like you lose like 50% in 1 year. No, it is more like you lose 30 or 25% in 1 year. Okay, so that kind of a gradual kind of a decline. So you can see that it can happen in many forms. But the panic always happens when it is the sharpest fall. So meaning that when you see a sharp fall, that is usually when people are panicked. Okay, and however, if you see that the fall is gradually decline, that also explains the psychology. So it means that the investors are losing confidence. They are hoping, hold on to it, and then when the longer they hold on to it, they see the price keep dropping, then they become discouraged, and then they are also selling along the way. But they are selling very little, not like they're selling panically. They're selling little by little. So that explains the psychology of the investors. So now, if you to ask yourself, 2023, what is your state of your psychology? Can anybody tell me? What's your current state of your psychology? I mean, your thinking towards the stock market at the moment. Let's say Malaysia market. What's your current state? How do I see the chat? Slow. Focus on discipline. Yeah, Zakaria, that one is for automatic, right? Discipline, yes. Slow. Stay back. Okay, yes. It's more like you want to stay at the sideline, and then you want to be slow in to see that, okay, why don't I stay at the sideline first, and then to see what is going on before I make a move forward, right? So you tend to invest slowly, okay, at the current state. And that is because you are looking at the environment, looking at our GDP, our fundamental of the economy, and then you come up with that conclusion, is that you want to look and see first. Exactly, okay, Shima, you want to look and see first, because based on our GDP figure, our exports figure, and our PMI figures, and our ringgit figures, and exports figures, what else, okay? So then you want to look and see, okay? So that's perfectly normal. But however, I'm just talking about my opinion is that if you are really for long term, okay, you are really for long term, if you look across the different types of industries or the different types of sectors in our country, don't you see that our life still goes on? And we still continue to do banking. We still continue to go to work. We still continue to eat. Life goes on, okay? And the unemployment rate is not as high as other countries. Our unemployment rate is still manageable. So which means that people still have income. It's just that in terms of spending, they become very cautious in spending because everything is so expensive. So in the past, maybe you can buy more things. Now with the same amount of money, you buy less things. So that means that you have to be prioritized. You can't eat out so often. You have to save your money. So that kind of a thinking. So so that is perfectly normal, because with that thinking, then when you come to your investment, you have to be extra careful. But nevertheless, certain industries, you can still see that their profit, their revenue still there. Okay, although certain sectors, you may see that they have a sharp fall in their revenue, and that is because those sectors is structural change. There is a structural change in those industry. For example, the glove industry, the demand has fallen, the supply has oversupplied. Then you see the price of the average selling price of the gloves back to below 20 USD per box. So you are looking at the environment that caused this selling price to plunge. So therefore, naturally, their revenue will plunge as well. Okay, and that is because of their cyclical nature. But if you would identify some of our Bursa Malaysia industry, can you identify certain industry whereby their market share is always there? You always see people doing patronizing the organization, the business, and we still continue. Okay, so can you tell me which industry or sectors in Bursa Malaysia are more stable in terms of their revenue, despite we have all these recession fear? Tech sectors. Okay, you have to see which industry of the tech sectors. You cannot just say tech, because there is a certain industry is having trouble. Banking, yes, banking. Palm oil is cyclical because palm oil is the pricing that is beyond your control. So palm oil is cyclical. Utilities, yes. Okay, consumer, yes. All these are stable because we have to eat. We have to go to the bank. We have to put our money in the bank. We still need to borrow money. Our housing loan is still with the bank. The bank still make the money from us. Doesn't change. Okay, as long as we are still the customers of the bank is still okay. Okay, unless we say that, okay, we want to default on the bank, so then the bank will be in trouble. But so far, no massive default or anything. Okay, the banks are still okay. Semiconductors are in trouble. Okay, the semiconductors, because of the weakening demand on the hardwares. Although the software, there's an increase in the demand, but the hardwares are weakening. So the chips manufacturer, they should be experiencing some drop in the revenue. Okay, how much is the drop? Depends on how much orders they are losing. So, and we have to understand that the semiconductors industry is undergoing some major structural change. And what is that structural change? Is because of the self-sufficiency rate. So all the big countries in the world, they are all talking about self-sufficiency rate. So for example, China. Can anybody tell me what is the self-sufficiency rate for China by 2025? Anybody? Self-sufficiency rate for China for semiconductors. Anybody? By 2025, 70%. Okay, it's 70%. So that is their looking at their self-sufficiency rate. 70%. It's just 2 years later, then they have to be self-sufficient. Now they are importing a lot from us, maybe like 90% or 80%. But in 2 years' time, they're going to be producing so much of our chips until they are almost reached their self-sufficiency rate. Then how about the EU countries, the European countries? And 2 years ago, they came up with the act. Okay, the act is that they by 2030 or 2020 something, okay, then they are looking at they only import 10% of the chips from Asian countries. only 10%. Now they're importing majority of it. So by certain deadline, they will only import 10%. Then you look at the US. US, they always use these semiconductors as their national security issue. So then they want to be self-sufficiency as well. And you have already seen that the TSMC has set up factory. They give a lot of subsidies for them to set up factories in the US, and so that there is a transfer of technology, so that now the US is also capable of producing their own chips. So then who else will buy from us? If let's say all of them are self-sufficient, who else will buy from us? Okay, so the semiconductors will be in a difficult position, challenging position in the years ahead, unless what? Unless, because now you see the chips, there are different types of chips, right? The common chips is those hardware chips, whereby they are going to your devices. But what is the hot thing now is the AI chips. Okay, so if let's say you say that, oh, my company, let's say like Inari or Uchitech, recently Uchitech announced in their annual report, I mean their news media release, their earnings release, they said that they are currently having about 20 products, new products, they are under the R&D. So that means this company, they are investing in the R&D, and then they are actually hoping that with this new product, they can attract new orders. Then there is hope for this company, because they are actually looking for new products to attract new orders. So that means you don't rely 100% on your chips, which is declining in sales. So you must be able to identify those companies that they have all this R&D. Okay, so if let's say with the right equipment, with the right innovation, you can also invent your own AI chip. Okay, although I don't see that they can do that now at the moment, but I'm thinking that maybe they can buy the equipment, okay, the AI chip equipment. Maybe they can also produce AI chips as well. So at the moment, which are the companies that are producing the AI chip? And the biggest is who? Which company is the biggest producer of the AI chip at the moment? Anybody? NVIDIA, very good. So that's why you see the share price of the NVIDIA is like a straight line go up, because people see the potential in the NVIDIA. Besides NVIDIA, there are also other AI chip manufacturer like the Microsoft. They also have their own AMD, yes. And then even Meta, even the all these big tech company, Amazon, they also produce their own AI chips. It's just that the NVIDIA AI chip, okay, is more easily, readily available for us as a retail people. So for example, for me, okay, if let's say I want to develop a generative AI trading bot, okay, so then I will have to buy the NVIDIA A100 chips. And then I have to buy that A100 chips is about 10K USD. So I have to buy those kind of AI chips, and then I ask my developer, and then we crack our mind, and then we try to learn how to program in this AI chip, and then we produce something out of it. Okay, at the moment, no, not yet. Okay, because we do not have that expertise at the moment. But I'm thinking other people will have the expertise. Then they will just buy the A100 chips from the NVIDIA, and then they can become their own startup. And a lot of people are doing that, especially the startup industry. And the NVIDIA is the easily most approachable AI chip. So you are looking at this kind of a potential, and then that translate into the company's sales. And then when you are seeing the potential sales is there, then that translate into the current share price. Okay, whether it's overvalued, another story. Okay, so overvalue, undervalue is another story, but definitely people see the potential. Okay, so let me share my screen again. Okay, so here we are looking at, we make decision based on probability. Okay, when it comes to rational decision, we have to think. Okay, and then we have to think what are the probability of going higher, what are the probability, and then what is my cut loss, the chances of, okay, what are the chances of going higher. And a lot of time, if you want to do a long, Okay, long means that buy low, sell high, right? Long means that you want to buy low, sell high. Okay, so when you want to long, basically you have to be above that 20-day MA line or above that 200-day MA line. Okay, you can do a 15-minute chart or whatever, but the big picture is that it is above this 20A, 200-day MA line. Basically, when you long, your chances of success is high. Okay, how about if, let's say, your big picture is still above the 28-day and the 200-day, is still above it. Let's say the NVIDIA is like that, okay? Can you short? Okay, will you short here? There's no right or wrong. Okay, so will you want to short here? Anybody? No. Okay, so the thing is that you have to look at the situation. Okay, it's not that you cannot short, you can short, but then you cannot have big profit target. You have a very short profit target because you know that it will quickly rebound because you are still very, very bullish. You are still above that 20-day and the 200-day. So if you to short there, so meaning that you won't have a big profit, you just have to cut your profit short. Okay, can short term, right? Yes. So meaning that you just want to keep it small profit, touch and go. Okay, so you can still do that, but it's just that if you are in this kind of a situation, if you long, the chances of success is higher. Okay, and then if let's say you want to short, sell, so if it's below the 20-day and below the 200-day, then also your chances of success rate is higher. Then maybe you can do short, and then you have a longer profit target. So these are all adding to the chances of success rate. And then only you may also look at the other indicators like the volume indicators or the candlesticks or the chart pattern. All these indicators, pattern and everything, you add together and then you add your chances of success. So if let's say you say, oh, I have this major head and shoulder, and then it has crossed below the 20-day and the 200-day, and then it has crossed below the neckline. Everything is in line for a short, a bearish trend. Then you short, then the chances of success is higher. Okay. Okay, so these are the sentiment indicators. So at the moment, I look at the fear index, the volatility index quite often, because the volatility index will tell you what is the sentiment. So at the moment, what is the sentiment of the market? You can go to the CNBC website. Okay, CNBC. And under the US, you click the US. And then this is the volatility, the VIX index. Okay, so if you see the VIX index is rising, so that means that the fear is building up. Okay, so then here is all in red. And but then you must look at the chart. So actually below 14 is actually considered bullish. The level is 16. Anything below 15, 16 is considered bullish. So at the moment, overall, it's still bullish. It's just that temporarily it is a bit bearish. Okay. And also, if you look at the news headline, you see that the Fed sees more rate hikes ahead, but at slower pace. So what does that mean? So meaning that he's sending the signal out. Okay. So can anybody tell me, with this statement, what is your impression? Where is the direction of the stock market for the US stock market? Can anybody tell me? After you read this sentence, you tell me how you think about the stock market, the direction. Up, down, horizontal, what is it? More rate hike. Ranging. That's a safe answer. Okay, what else? Anything else? You see the down, okay. Who else? Sing hot say up, okay. Who else? horizontal, down bias. Okay, who else? More answer. Anything horizontal? Horizontal is a safe answer. Who else? Okay, Mihar say up. Shima say up then. It's like no choice, then you say up then. Okay. My feeling is up. My feeling is up because you see, when you say something like that, that means that you are still looking at your economy is very hot. I mean, your economy is good. That's why you want to raise the interest rate, which means that the business are still okay. You get what I mean? The psychology of this interest rate is that if you say that I'm going to reduce the interest rate, and that people will see that, okay, are you saying that it's going to be recession, and then that's why you want to reduce the interest rate? Okay, so that's the signaling behind. So now he's saying that he's going to increase more interest rate. So definitely, I think it is still up. Okay, it's just that on the way of up, you definitely will have some correction, but the big idea here is still an uptrend. Okay, at the moment, especially now July, right? Next month is August, right? Next month August, then it will be a different story. But traditionally, August is a volatile month. But now July, you can still make the best out of it. Okay. But I already see that a lot are in like exhausted already. So maybe that's why a lot of you say horizontal, because maybe you have seen that the uptrend is exhausting, and then they may be moving horizontally. But overall, it's still an uptrend, I would think. Okay, overall, it's still an uptrend. And then perhaps maybe in August, September, then maybe they will come to like a correction. Okay. So why does the Dow Jones down last few days? Okay, the down was because of the over taking profit taking. Okay, isn't it? You want to take profit when you see some profit. So this is a normal investors, traders behavior. So after you have seen that the market has gone up for so good, we haven't seen this kind of a market for so long. The last year, whole year, we haven't got this opportunity. This year we got this opportunity. So psychologically, you are scared that the market is still weak. So psychologically, every time when you see some profit, you want to take profit out of it. It is just a normal. Okay, so I think people are taking profit. In fact, I also ask people to take profit in July, because I feel that July is a very bullish month. So when it is bullish, it's good to take profit before you come to the August month, which is the volatile month. Okay. Okay, so let's continue. Here we are looking at this game. Okay, let's say we have a game here. So this is an experiment. Okay, but anyway, we just play the game here. And if we throw a coin, okay, a coin, head or tail. We throw the coin and then we say, okay, head or tail. So if you guess correctly, you can get $2.50. If you guess wrongly, you lose $1. So this is in USD, let's say. Okay, so if you guess correctly, you make $2.50. If you lose $1. And you have 20 rounds. Okay, meaning that I will flip the coin 20 rounds. Okay, now type in the chat here, how many of you will play all the 20 rounds without fail? Doesn't matter you win or lose, you just play all the 20 rounds. And how many of you will think maybe if you win or you lose too many rounds, you will stop for a while, and then when you see that your luck come back, you continue to guess again. Okay, how many of you think that you will do all? Then you type an all. And how many of you think that you will not? Then you say no. Okay, so I want to see your answer. Okay, honest answer lah. Okay, not the textbook answer lah. Honest answer, yourself. Okay, truly yourself. Okay, so Sing Hot say all, and then Yi Kyung say no, Edmund say all, and then Shima say not all. Okay, good. So those of you who say not all, no, that means you are the normal human behavior. So normal human is that you see, okay, I play the game. If I win, I continue to play. If I lose, then I'll stop already. Okay, so that's normal person. But if let's say your brain, your mind is like a probabilistic mind. Okay, so probabilistic mind will be like Wilfred, Sing Ho, Edmund, those who say all. Okay, so these are the probabilistic mind whereby you calculate your probability. You see that your probability, the odds are in your favor. You see, 250, you win, you get 250. Lose, you only lose 1. So the net result, if it's a 50-50, right? The net, you still make money. If it's a 50-50 random chances, net, you still make money. So by the probability itself, the payout is to your advantage, this game. Okay, this game, the payout is to your advantage because 250, you win. And then if the next one you lose 1. So you still keep 150. Okay. And then the probability for the coin is usually 50-50. 50% head, 50% tail. So that is the normal probability. But when you play, it could be different. But the thing is that based on that normal probability, you make this decision of all. Okay, you just have to play it all, that you just play. Because sometimes if you lose 5 rounds, okay, you lose 5 rounds, you pay $1, $1. You pay $5, you lose 5 rounds in a row. But when you make things correct 2 times, okay, 2 times you make it correctly, you make back your 5 rounds of losses. Is it good deal? Okay, so the chances is that it is to your advantage. So you just go for all. Okay, so in investment, in trading, we must be able to have this kind of a probabilistic mind. Okay, so if it's wrong, it's okay, because I have already done my analysis, and then I carry out, and then if it's wrong, then I just take the loss, cut loss, and leave. No emotion attached. Do not regret. Okay, the worst thing is regret, because you think, yeah, might as well I don't cut loss. You see, if I didn't cut loss, the price go back up already. You cannot think like that, because if this round you may be like that, but how about next round? It may be a gap down. Okay, so you can't think like that. You have to stick to your plan. Okay, so these are the common investors' emotion. So you have followed the crowd. So everybody buy AI stock. You also buy AI stock, but are you buying at the last stage, or are you buying at the beginning stage? Okay, you have to understand the trend of this AI stock started in the beginning of the year. Now it's already July, half year gone already, 6 months gone already. So if there's any uptrend, especially for the team, usually it's about 3 to 6 months. Okay, 3 to 6 months, you see the uptrend will continue. In some rare situation whereby the demand is like definitely is always there, then this will be stretched out to 1 year. Okay, so it could be 1 year of an uptrend, but usually it's 3 to 6 months. Normal team. Okay, normal team is about 3. Some team, actually some teams you can only see 3 months only uptrend, then the team dies off, and then the trend goes off. So that is looking at the duration. Okay, so this duration, you can always back testing in the chart. You can bring out the chart, and then you look at the different stocks. There are industries, different industries. For example, solar energy. So when was the last time where solar energy had a big jump? And that was when Joe Biden elected as a prime minister. I mean, not prime minister, the president. Then you are looking at the November 2020 all the way to 2021, maybe about 6 months. February or March. Okay, so that was the run up of that solar energy theme during that time. Then another time was the electric vehicle also. Okay, electric vehicle also have some run up, so you have to calculate how many months of the run up. And then now we have this AI. So AI, you see, it started in the beginning of the year, January, February. And then you see now it is July. Okay, so how far it can go? If you see the chart is very steep, so meaning that it may still have some room to go higher. But the duration is 6 months already. So then you must be caution yourself. So is it at the third stage or the last stage of the wave? Okay, so you have to think about it. Okay. So then the confirmation. So this confirmation is when you are believing in something. For example, you believe that the glove stocks are good. Okay, you believe the glove stocks are good, then you will seek for confirmation. Then you will talk to those people who are buying glove stocks. You will look for those information that write good about glove stocks. Okay, so that is called confirmation. You want to get confirm your belief by looking at similar situation. So this could be bias. Okay, could be bias. And the other one is overconfidence. Overconfidence, I make a take here, is because a lot of time we lose money is because of our overconfidence. Say, for example, you make 5K. In a short period of time, suddenly you make 5K. Then while you are very happy, it's like, wow, I can make 5K in such a short period of time. Okay, so what will be your next step? Then your next thinking will be, if I were to repeat this, since I can make it, okay, if I were to repeat this again, then I will make more money. Okay, so I can do it again. So because of your big winning, then you got confident that you can do it. That means you have the skill. You are capable of making money again. Okay, so you believe that you are very good already. So then you will quickly look for another trade. And then usually because you are too overconfident, you see another trade, although the trade is not as good as before, but you just go ahead and put your money in, because after all, your money is like windfall money, right? So then you just want to try, and then you just go into it, and probably you will lose money on that, or even lose more money from that. And that is because you have more bets on that. You put in more money, so you lose more money. Okay, so these are the things that we have to be careful. And another question is, how many of you, right, you must trade every day? Like every day you must trade. Anybody? Like on a daily basis you will trade. And then if let's say that day you didn't see some good buy or sell or whatever, you still trade something out of it. Anybody? Okay, not me. Okay, good. Not every day. Good. Very good. That's good. Okay, you cannot trade every day. Unless you have a tools, or unless you have a machine or tools or something to help you, because we can't expect our mental, our emotion is tip-top condition on an everyday basis. Sometimes our emotion is something that we don't even know. Like let's say you are driving, okay, you are a very skillful driver, no problem, you drive from Malaysia and then you run around the Malaysia, different states, no problem. So you are very, very skillful. And one day when you are driving on your way to your work, suddenly you run into this hole, okay, the big hole. You didn't see the big hole and then you run into it, and then your car is like pom, like that. So then you say, oh yeah, how come I didn't see that? Okay, so that was because you were not focusing. So in trading, although every day you are trading, Okay, but however, you cannot guarantee that your mind is in your tip-top condition every single day, because sometimes you may not be focusing without you yourself realizing. Maybe you had a quarrel with your friends. Maybe you had you didn't sleep well. Maybe you had important meeting later on, and then you are thinking about that meeting later on. So now you are trading here. So then your mind is with that meeting later, and then you cannot trade, you cannot focus. So sometimes you can be like that. Okay, so if let's say you are too occupied, and then if you realize that you are not yourself, like for example, when I'm driving to my work, and then I was absent-minded, and I forgot this, I forgot that. The minute I realize that I'm absent-minded, right, then I have to tell myself, maybe today I'm not suitable for trading. Okay, so that day I will not trade. You get me? So that means I have this kind of pre-warning towards my own mental state of mind to warn myself that, hey, if you continue to be like this, absent-minded, if you bring this to your trading desk, you may not be able to trade well. You get what I mean? So that is what I'm looking at. We cannot be overconfident. We cannot think that we are always tip-top condition. Okay, we can't. The tip-top condition only come when you have a good rest, and then you are back to your work, and then everything as normal, and then you just continue as per normal. Okay, so that is normal. So, but unless you tell me you have some robots, or you have some machine or some tools to help you. So if that's the case, then you can do that. Okay. On the availability bias is when you are very easily influenced by the news. So for example, you have the news of let's say US had a stock market crash. Okay, so then you get affected, and then you become worried. And let's say this news was happening maybe last few months, and then until now you still think about the US stock market crash. So you are still affected by it. So then for your judgment, everything will be biased already because you are affected by the news. Just like when we had that 2001 September 11, okay, September 11, where the plane crashed into the Twin Tower in the World Trade Center in the US, in the New York State. A few months after that incident, many people still cannot get back to the idea of flying on the plane because they still feel very scared of flying on the plane because of this incident. Okay, and in 2014, our Mars airline, okay, MH, also got plane crashes. We had 2 plane crashes in 1 year. So a lot of us, we just cannot get back to booking a flight with the Mars airline. We just feel too scared about the news, and then we are not able to go back to previously whereby we used to fly with the Mars airline. And after the news, right, it was a long period of time until the next flight you fly on with the Mars airline. Okay, so these are the availability bias that cause you make decision that you are being biased. Okay, you are being biased. So, and it could be happening to the stock market as well. So perhaps maybe you saw that every time when there is a news, a rumors about this company having some accounting fraud, then you will be afraid also. Okay, or you are afraid that maybe when the CEO of the company pass away, then you will be afraid as well. Okay, so certain news like this, sometimes you may affect your emotion, and then that will make your judgment become biased. Okay, so until now, people still worry about public bank, right? So that's why you can see that the share price is going further down. But actually, the management is already detached. I mean, it was already on their own, so it wasn't as worse as people think. Okay, so we just have to see things on an objective manner. And loss aversion is something that you refuse to cut loss. Okay, so if you see that, oh, you refuse to cut loss, meaning that you are afraid of losing. Okay, so a lot of time we buy some shares and then ended up the share is dropping. Okay, it become below. For example, you bought an IPO and now the IPO become below the IPO price. Then you are not willing to sell because you think that the fundamental is still good. Okay, maybe the fundamental is still good. It's just that the price has come down. Then you are being not able to take on to that risk. You cannot afford to lose money, and then you do not want to cut loss. Okay, so there's no right or wrong. It's just that sometimes if it's a value investing, for example, if that particular stock has a very good dividend, then you don't have to sell. You don't have to cut loss. You just continue to hold it, and then the dividends will come to you. Because if let's say the dividend is about 6 or 7%, okay, by the rule of 72 divided by 6, 9 years, in 9 years, you can get back your capital. Okay, so that is looking at the dividend stocks. So maybe later when we do the simulation, the website, we can see how we can construct a portfolio whereby we have all the dividend stocks. Okay. So this is another example. Okay, let's say if you are given the following options. Okay, either you can win 1,000 ringgit instantly. That means I give you 1,000 ringgit, you just take and then you put it in your pocket. Or you want to take a bet. If you win, you can take 2,000 ringgit. If you lose, nothing. Okay. So can you type in the chat here, which option would you choose? Option 1 or option 2? Would you want to take that 1,000 instantly, sure gain, or you want to take a bet? If I win, I can get 2K, but if I lose, I got nothing. Huh? I think say depends. depends on your whether you feel the luck, whether you are lucky or not. You feel lucky or not. Okay, God Cheng say 1. I must say 2. Okay. Sing Hot say 1. Okay. And Amel say 1. And Lauren say 1. Okay. Majority, I can see the majority there. It's 1. Okay, very good. Whenever I ask this question, the answer is always 1. Okay, people basically they want to get the sure gain. 1,000 ringgit, I can get it for free. I will get it. Okay, but if you want them to take a bet, making a risk, there's a risk involved. So you may be ended up getting nothing. So nobody want to take this. Okay, how about here? You are given these options. Either you lose 1,000 immediately, I take away your 1,000 ringgit, or you take a bet, head or tail. If you guess correctly, you will lose nothing. If you guess wrongly, I will take away 2,000 ringgit from you. So which one would you choose? 1 or 2? 1 or 2. So God Cheng say 1, and Sing Hot say 1, lose immediately. Shi Ting say 2, you want to take a bet. And Shima say 1, Olivia say 2, Hui Wen say 1, and Durasami say 2, Feng say 1, Edmund say 2. I have like 50-50 like that. I see that you are like 50-50 like here. Let me see. Yeah, you guys are like 50%. I won't take the bet. Okay. But if let's say you are forced to choose, make a choice. Okay. If let's say you just have to make a choice. Okay, Lauren say 2. So I see that 50-50. 50% of you guys are taking the loss immediately. Okay, at least I just take 1,000 lose, and then I won't lose 2,000. But there are 50% of you want to take a risk. You say, okay, if I win, I will lose nothing, but if I lose, I will lose 2K. Okay, so then which is the right answer? There's no right or wrong answer. But whenever I ask this question, a lot of my participants will take the 2. They want to take the bet is because they do not want to lose money immediately. Okay, they do not want to lose money immediately. But however, if you look at this and this, right, they are actually similar. So this one, you are getting 1,000 instantly, right? And this one, equivalent no cut loss. Yeah, equivalent to no cut loss. Yes. The mentality is the same because you do not want to cut loss, right? But the thing is that these two, the answer is the same payoff. For example, this one, there's a 50 chance of getting 2,000 and there's a 50 chance of getting nothing. So 50 times 2,000, 50% times 0, and your answer will be also 1,000. So the payoff of these is 1,000, same as this. So this two has the same payoff. So it will be the same, these two, same thing. This is minus 1,000. And then this is minus 2,000 times 50%. And then 0 times 50%. So in the end, it's minus 1,000. So it will be the same. So these two payoff is exactly the same. It's just that the way people interpret it, they do not want to lose money. I don't want to lose money. So I take a bet. So I take the risk. Okay. So then this brings us to the theory is called the prospect theory. Prospect. It's a name, it's a jargon, but then you don't have to remember this name. But the prospect theory is saying that people are afraid of losing money. People are afraid of cutting losses. So therefore, they rather not to cut loss, but to take on a higher risk. Take on more risk. I don't want to cut loss. I just want to take on more risk. You get what I mean? You want to take on more risk. So that is the mentality of a human. Okay, it's a human mentality whereby you want to wait and see. You want to see whether it will turn back up again. Okay, I hope that it will go back up again. So then this is more risk that you're taking. Okay, so here the prospect theory illustration, if let's say you are you gain $100 compared to your losing of $100, which one is more painful? Okay, so if you gain $100, your satisfaction positive value is this level, X. However, when you lose $100, same amount, 100, but you see your satisfaction level is minus 2x, twice the x here, minus 2x. So meaning that it is very extra painful for you in order to have that kind of a cutting loss. It's very, very painful. So for normal investors, we are exactly like this. Okay, it's exactly your emotion. You just have to be aware. You understand your emotion, aware, and then so that you don't have to come into this situation. You just have to condition yourself, and then maybe you put a cut loss, and they say, okay, I cut loss. If I go, I go. So usually for trading lah. So that's why if they are not ready to cut loss, I would suggest you to buy the dividend stocks. Because if you are buying the dividend stocks, right, you don't have to cut loss, because when the recession is over, the price will go up again, then the price will go higher. But the dividends is always there because the market share, the company has a very strong hold of the market share, and the profit is still always churning. So they will keep giving you dividends. So then you will keep getting the dividends despite the price doesn't go higher. Value investing, yes, that's right. So you focus on the value investing and then focus on the dividends, and you may not need to cut loss. You may not need to struggle with your own emotion. Okay, you just choose your tools differently. You just choose your investment differently. You just change your investment strategy. Then you cannot buy the tech stocks, because the tech stocks is very speculative, unless you buy the tech stocks under one condition. You say that, okay, this tech stocks, if I gain so much, or if I time frame is this much, I have to leave. I have to go. I have to exit. I cannot hold on for too long. Unless you are talking about some technology stocks that give dividends. In Bursa Malaysia, what are the tech stocks that can give dividends? Anybody? Bursa Malaysia stock can give dividends one. Can give reasonable dividends, because really some of them, they don't give any dividends at all. And some give very, very tiny dividend. Okay, Inari, reasonable dividend, yes. I mean the tech stocks. Okay, Inari, yes. Getronic, yes. Uchitech, yes. Uchitech gives a lot of dividends. Okay, so I actually put the Uchitech as the dividend stocks in the the portfolio there. Okay, but it's not a recommending buy because they have gone up too high already, the price. It's just that maybe when, but this is definitely affected by the semiconductors. Okay, the semiconductors are not doing well. It's just that they have other like new products that they are talking about. Okay, they have some new products and hoping that they can mass produce those new products and then to increase their sales again. Greatech doesn't give good dividend. No, not Greatech. This Unisem, I'm not sure. Okay, Unisem, I'm not sure how much is the dividends. Okay, so as long as you look at the track record of those dividends, of course, REITs, definitely the dividends are there. Okay, so all this later we will look at the portfolio construction later. So this is another experiment. Okay, Group A, you calculate, you give Group A. Let's say we give two groups of people, Group A and Group B. Group A, we give them this number. You multiply 1, 2, 3, 4, 5, 6, 7, 8, and then you give me an estimate using your mental calculation. Okay, you cannot use your calculator. You use your mental to calculate. Okay, what is the value? Okay, can anybody guess what is the value here? You just give me one figure. You don't press your calculator. You give me one figure. What could it be? You give me the answer. Okay, let's say 34K. Okay. Okay, good. How about this one? If let's say I give you this number, you calculate 8765431. So what could be your answer be? Okay, so if you say, oh, 8 times 7, 56. Okay, so you will say, wow, that must be a big figure. Okay, so you probably will give a big figure. Of course, now you see you are given these two, of course you say it's the same, but actually they are the same. It's just that when this is given as an experiment, the Group B people, they will tend to give a big number because of you start from this 87, and the Group A people will give you a small number because you start from 1, 2, 3, 4, 5. Oh, 1 times 2, 2 times 3, 6, 6 times 4, 24, and then 24 times 5. You see, you will tend to give a smaller number, but this one you tend to give a bigger number, and this is because of the anchoring bias. You are putting your reference point with the previous number. Okay, just like you look at Top Glove. Top Glove previous price was 10 ringgit. So then you use 10 ringgit as the reference price. Then you are having an anchoring bias. Is it very risky? Yes, it's risky because they may never go back up to that level. You may never have a pandemic again. The average selling price may never go up to $200 again. Okay, so you have to realize that in the end it's the average selling price. So about 40K, I don't know what's the figure. I think it's about 50K. Okay, 1, 2, 3, 4, 5, 6, 7, 8. 40,320, 40K. So the 34K for Vision is very good estimate. Okay, so their mental calculation is very good. So it's 40K. Okay. Okay, let's continue. So then come to the next part here. How do we avoid emotion-based investing? So we have to do a lot of research. We have to conduct research, conduct analysis, and such that we are looking at objective. We are trying to see things in a more objective ways so that you do not have all these kind of bias. Although I know it's difficult, it's very, very difficult, but even when you have done some research and analysis, right, you tend to have this confirmation bias. You tend to try to confirm your belief, okay? But that's why I rely on numbers, rely on statistics, rely on data and facts, okay, which is the most important. And then you have to implement some risk management strategies. So the risk management starts from first asset allocation. Okay, you must have your asset allocation in the first step, meaning that how many percent into fixed deposit FD, how many percent into the equity, how many percent into the unit trust, how many percent into the regular savings plan. I believe every one of us, right? If you haven't started a regular savings plan, you need to start a regular savings plan, because the regular savings plan is for you to do some forced saving. It's really good, okay? It's some forced saving that you are working towards it. And especially for young people, if you are looking at your age, 25 years old. So at such a young age, the earlier you start to force yourself for savings, the better the better position you have, financial position you will have. Okay, when you are in your 30s, your financial position is much more solid than your other friends, because you have this forced savings. Okay, so this forced savings, regular savings plan, you can buy into dividend stocks. If let's say you want to buy into the Bursa Malaysia stocks, the dividend stocks, or you can go for unit trust. Okay, unit trust is it's called direct debit DDR. Okay, which means that every month they will just debit your amount from your account and then invest in the unit trust. You can choose, for example, my client, usually I would let them choose invest into two instruments. For example, 200 ringgit every month. Okay, so this 200 ringgit, right? 100 ringgit will be a more risky one, like TA Global Technology Fund. Okay, TA Global Tech is a high risk one. It's a tech stock, but it's high gain, high risk. Okay, so 100 ringgit, 50% go into that. Another 100 ringgit, 50% go into a secure bond fund. Okay, and that bond fund is a very stable bond fund. It could be M bond, RHB bond, or whatever. You have to see the track record. It's very stable. Okay, so then you are saving your money, 200 ringgit on a monthly basis. And the earlier you start, by the time when you reach about your 40s, 50s, maybe you will already see a big amount of money in your savings there already, just by putting 200 ringgit per month on a monthly basis. Okay, so it's a good savings strategy. But anyway, asset allocation. Okay, asset allocation meaning that you put certain percentage into equity, certain percentage into fixed income. Then number two, your sector selection of your sector selection. Now, this sector selection depends on your objective, like on your analysis. Okay, because there are so many sectors out there. There are 13 sectors in Bursa Malaysia. Then which sectors you want to invest? Then you have to see what is your objective. So if let's say just now I say my objective is to construct a dividend portfolio. Okay, so then I have to find all the dividends in the portfolio, right? So here my sector selection will be into different sectors, but then they all have the same dividend. Then the third step will be your stock selection. Okay, then you put in those stock one by one into this individual stock selection. So after you have done this, then your second step, what is your exit strategy? You must have an exit strategy. So meaning that when do I need to sell? Do I just want to collect the dividends? Okay, so maybe I say, okay, I want to sell when the fundamental is in question, or the market share. Okay, I want to sell when the market share is declining, or I want to sell is the selling price, average selling price, ASP, is declining. I want to sell when orders are dropping. So you must have certain criteria so that before the industry move on to become like a sunset industry, you quickly exit the market before it even went to a sunset industry. So then you can protect your money. Okay, so that means you have to monitor all this exit strategy. So these are the risk management, meaning that you have asset allocation, and then you have diversified into various sectors, and then you have some exit strategies in place. 1, 2, 3 steps. Okay, asset allocation, diversify your sectors, and then your exit strategy, meaning your cut loss or your exit. Okay, now let me share with you this screener. So this one is a simple screener that I get from this KLSE screener. Okay, so I'm sure all of you are very familiar with this KLSE screener. So if you are not, then I'll give you this link. Okay, so I'm using with the help of these tools. Okay, this is called the KLSE screener. Simple one. I just want to get the dividend because I said I want the dividend portfolio, right? So I just want to get the dividends. So the dividends I give here for 4% of dividend maximum, I leave it blank. I just have one criteria there, very simple one, and then I screen. So after I screen, and this is my results. So the results, I rearrange it. I use this category, I rearrange it into alphabetical order. So then I can see that, oh, different sectors, I can choose which stock. Construction sector, I want to choose Gamuda. Consumer sectors, I want to choose Amway. Then the financial sectors, I want to choose Maybank. You get what I mean? So meaning that I am actually using the tools, okay, these tools to screen the dividends stocks, so that I want to put it in my the simulator here. Okay, so this simulator, how I got into here. Okay, so now I want to share with you how do I get into here. I go back. I have to back to the main homepage here, which is the Bursa marketplace. Oh, sorry, Bursa Academy. Okay, so if you haven't, how many of you have logged on here before? How many of you have a member here before? Okay, yes, Kishala, anybody? Very good, very good. Okay, so if you haven't, you can register here. Okay, if you haven't registered here, but not fully utilized. Shima, then you log in now and I teach you step by step. So if you have registered, you register now. Okay, with your Gmail, very simple. Just one click only, Gmail, and then you'll be automatically registered. And then you will come to the simulator. This simulator is the equity simulator here. Okay. Simulator, we use the equity simulator. No money one, no need to pay. It's a free service. They will give you a virtual money of 100,000. You have a virtual money of 100,000, and then you can buy the stocks. Okay, so you can construct your own virtual paper dividend portfolio here. Okay, so you register first. Okay, so Melissa, you register first, and then you will come to the website here. Okay, rearrange. I have to rearrange here again. Just now so maybe I'll just close everything lah. I will go to that page 2. I close everything. And make it a blank one. Okay, we start from a blank page. Paper trading, yeah. For paper trading, it's good. Okay, Margaret, it's for virtual trading, it's for paper trading. So you have to go back, you have to go to Bursa Academy. Okay, I give you this link, Bursa Academy Marketplace. Okay, this Bursa Academy Marketplace. Bursa Academy. Okay, this one. This one. Okay, so this is the website, Bursa Academy Marketplace, and then you can click the simulator, equity simulator. Okay. And from this equity simulator, okay, so it's loading now. So then you will come to this platform. So this platform is exactly the same as your common normal trading platform. It's just that this one, you can use your virtual money, which is 100K. Everyone, we are given 100K. Okay, so this is, you can click here. This one, the first one is the code. Okay, you click the code, then you can get the code screen here. Okay, default they have some they have some screen there already. Okay, but however, you have to construct your own watch list. So for me, I constructed 2 watch lists here. One is dividend watch list, one is technology watch list. Okay, so I can add more things. So let's say I want to add the buy. I click the buy. Okay, I click the buy and I have the buy here. If I click the sell, I can also have the sell. Or become the sell already. The buy becomes a sell. Okay, I want to buy. I don't want to sell. Okay. Then if I want to click the news, I click the news, Bursa news. Then I have this Bursa news. Okay, so this Bursa news become here. Then I can see any news coming out. Okay, so then this become my customized platform. If I want to see, this is my KLCI top 30 components stocks activities, I use KLCI. Otherwise, I can have different things. I can have the banking sectors. I have each one of these. I just choose. Okay, so here I just put KLCI. Then I will have all the top 30 stocks are all listing here. So I can see that, oh, today you have -6 points. So the 6 points, is it contributed by public bank? Is it contributed by which one? Which stock here contributing this fall? Then here is the summary, the chart of our KLCI chart. Okay, it's just a summary chart. And here is my watch list now. Okay, so it's this watch list that I want you guys to focus. Now, just now, I went to this screener and I screened these high dividend stocks, right? 4% and above. So all here are all 4% and above. So I have 5%, 4%, 10%, 5%, 5%, 4%. So all these are the dividend yield that these particular stocks have. Okay. And some of them, it may be one-time off. For example, the Gamuda. Okay, so this Gamuda 10% maybe is a one-time off because they sold off their concession division. So then they have one extraordinary gain. So they give away to the shareholders. So it's a one-time thing. So if it's too high, you have to check back those previous trend and then to see that if they are consistent in giving high dividend. Okay, but mostly 4-5% I think is a normal range, 4-5%. Okay, so these are the 4-5% which are the normal one. Okay, so then you can choose. So I didn't choose any stock from the construction. I go to the consumer. So for consumer, I choose a few. Okay, so back to here again. Okay, so here for the consumer, I choose Amway. I choose Astro. So these are all high dividend consumer sectors. So because here I can differentiate them by sectors. So it'll be according to their alphabetical name. So this is stuff from A, B, C, H, M, L. So you see it's alphabetical name, but in fact, you know their sectors are. So Amway, Astro, Axiata, these are B Auto, these are all consumer sector. Okay, so in this portfolio, although it's all dividends, but I also want some variety. I want some diversification. So the diversification, I'm looking at consumer being stable, right? Because we are consuming. So it has to be stable. Despite the recession will affect, but once the economy come up again, then, basically you are back on track again. But the market share is still there. Your market share is still there. So consumer, okay, what else? I have some industry. I have some utilities. I have some REITs. REITs, I didn't put too many there. I have some banking. This is industry. This is REITs. This is utility. I have one technology there and one plantation there. Okay, so I have some diversification. Although the major ones are consumer, banking, and industrial, consumer, banking, industrial, but I also add some single odd industry, which is to give myself like a variety, like a diversification. So I do have some technology, one technology stock, one come in, and then one plantation come in, and what else? Okay, so I have these two single stock that represent this industry that join into this portfolio. So then this become like a portfolio. Okay, so then with this portfolio, you can look at the chart. Okay, so the chart usually you can see from here, or you can go to the tradingview.com to look at the chart. Say for example, you look at Amway. Okay, so let's say you want to go for Amway. So Amway is a household name kind of this is a 15-minute chart. So if it's for investment, do not look at 15-minute chart. Investment, you have to look at daily chart, okay? Because it's for long term. So you don't go for short term. So long-term investment, go for daily chart or even weekly chart. To reduce it, zoom a little bit. Have to zoom out. Okay, so you look at this chart. It is moving nicely on an uptrend. It's 5 something. Okay, it's just a fair price. It's not like undervalue or maybe it's overvalued a little bit. It's just fair price. Is the trading view free? Yeah, it's free also. This one is also free. Okay, because here you can see you can use your indicator here. All these are free, but because the free version you can use up to 3 indicators. So you limit yourself to 3 indicators only. Okay, then you can enjoy the free chart, and it is up to 20 years of data. So this data is free for 20 years of data there. Okay, so you can see that this is the Amway, and then you go back up, go back here. So you see, okay, maybe now is not a good timing, then you wait, and then, but this one is your watch list. Then you see one by one, Astro, Axiata, B Auto, and then you see which one it is undervalued. So usually undervalued, I look at the RSI, because the RSI is a fear index, because it shows you that people are selling too much, oversold, okay, the RSI. So maybe you can bring in one RSI at the bottom here. And then this RSI, if it's below certain level, then you know that this one is a buy opportunity. Okay, provided the fundamental is still strong, provided that you know that the market share is always there. It's just that temporarily the price is depressed, okay, because overselling. Okay, so the situation you may have is just that it may not very often, like this one, the last time it was there was March this year, March. Then the last time it was there was around October last year. So this was the time. Okay, so 450, and then now it's 5. So probably you make about 90 cents already. Okay, but the dividends is about 5%. And then you have of course the banking, you know, about 4-5% is always there. And the Gas Malaysia is the industrial product. whereby the market is quite stable because those factories that require the gas is always there. They will require it forever when they are producing something. Okay. Okay, delay time. Yeah, TradingView is free. Delay time 15 minutes. Delay time 15 minutes. Swing, best what time frame to use? Swing trade, is it? Swing trade, what time frame to use? Daily, 4 hourly or daily chart. Okay, swing trade, 4 hourly or daily. Not too short, okay? Have to be at least hourly chart. Then I have some Tenaga here, Malakoff here. These are utilities. I have some REITs here. Okay, some REITs. I have Pavilion REITs. I have banks. Okay, a few banks here, Maybank, a few banks. I have plantation and technology. Okay, so this is just a sample. Okay, it's not a real portfolio. It's just the sample. I just based on here. Okay, for education purpose, I see the dividend. So you have to do your own research. Okay, you have to do your own research. And I just want to illustrate to you that where you can find those things. So where you can find, you can get the screener to help you to find. Okay, and then you can key in one by one. You can add here. You can key in here, and then you just add. There's a plus here. You just add to it, and then it will be here. So then you become your own portfolio here. Okay, swing trade means how long to close. Okay, swing trade usually is about a few days or even weeks. Okay, about a few days to up to 3 weeks like that. If you use 1 hour chart, you can still use 1 hour chart. Okay, you can still use 1 hour chart for like a swing trade, like a few days like that also can. Okay, then so that's how. Okay, and then also for the technology, you can also use the same method. You can select some technology, but however, usually for this technology, I use the Bursa Malaysia stock base here. Okay, Malaysia stock base, and then I click the market, and then I come to this sectors here, all the sectors here. Okay, so then I have the sectors by filter. So you filter by technology, tech sectors. Okay, and here will be all the tech sectors. So from here you choose. Okay, you choose, and then you will put one by one into here. Okay, so here I get all the tech stocks here, like CTOS, DNO, Elsoft, Frontcan, Greatech, Gtronic, Inari, MI, MyEG, Penta, VTROX, and all this. So these are all tech stocks. So you can gather all the tech stocks, and then you can monitor. So the watch list is the first step. If you want to do paper trading, you have to come up with a watch list, because it's with this watch list, then only you can buy. So here you can buy here. So let's say you want to buy this Gas Malaysia. Okay, so you click Gas Malaysia, double click. Then this will refresh here. So you can start to buy. You see, I have so much money here, almost 100K, because in my previous demonstration, I used up 2K or 3K. Okay, so now I will use up another 3K here. Okay, so I buy at the limit price of this price, 3.03, because I have bid price is 3.02, and then my ask price is 3.03. So somebody is willing to sell at 3.03, but however, people are only willing to buy at 3.02. So shall I buy at 3.02 or 3.03? So it depends on you. So if let's say you don't want to wait, like for now, I can't afford to wait. Time is losing, right? So I said, okay, I want to buy straight. So I go to here, 3.03, and I key in 3.03 there. Okay, so I buy. How many shares? how many they are giving also many. Maybe I just buy 1,000 shares. Okay, 10 times 100, 1,000, and I click the buy. Okay, so then it become in the order already. Is this webinar recorded? Yes, it is recorded. You can go to LiveCham channel. Okay, LiveCham channel. For the tech stocks, which criteria watch? Okay, Lily, that's a good question, because the technology is a complicated thing. Within the technology, you have semiconductors, you have the software, you have the equipment base. Okay, so there are so many industry. So usually here, I prefer the equipment base, and then the equipment base I prefer with the AI or R&D innovation company. So meaning that they are producing some equipment, customized equipment, and for maybe overseas, mainly overseas clients, because Malaysia is a small market. If you rely on Malaysia, you can't make much money. So it has to be overseas, right? Exports oriented. So then you are looking at the industry itself. The criteria, if you were to ask me what is the profit margin, all these are very subjective, because certain industry you can have a higher profit margin. And then as the PE ratio, certain industry, the PE ratio for the tech sectors can be too high, 40 times, 35 times, and people still buy into it. So the fundamentals is too wide. I mean, the criteria are too wide. So then you focus on the industry itself. Okay, so meaning that you have to understand the industry, what products that they're doing, who are their customers, and then whether these customers are ongoing for a long-term relationship. Okay, because for these technologies, they are looking at orders. So if their customers stop ordering from them, then they will lose a big business. They will lose their sales. Okay, so that is why if you are investing in technology stocks, you have to understand the fundamental, meaning that you can't hold it and then you close your eyes. You don't want to look at it and then you just let it grow like that. No, not for technology stock. Technology stock you have to monitor. Especially you are looking at semiconductors industry, you definitely have to monitor. Okay, so that is looking at that. Which link web to use? Okay, for tech stocks, I look at many things. I look at the CNBC news, I look at the Bloomberg news, I look at there's one called the there's one new the Motley Fool. Okay, the Motley Fool, this one, the website. So the Motley Fool, they always have very good analysis on technology stock. The Motley Fool. Okay, so this website, they always have good analysis on the tech stocks, and I find I always refer my technology information from this Motley Fool. Now the technology development is in a fast pace. Okay, so if we do not keep up with what is happening, we will lose a big deal. So definitely you have to read all this news. And if you were to ask me any specific, there's no specific. You just have to be well read across all kinds of platforms. Okay.
Okay, looks like Pauline, you addressed all questions, right?
Yes, I have. We have come to the end of the session already.
Yep. So you have addressed questions along the way when you do the presentation. So thank you so much, Pauline, for doing this segment for us. Okay. So ladies and gentlemen, you just heard from the CEO of Sigma Wealth, who is Miss Pauline Yong. Hope you enjoyed the session.